Hey, what's going on, boys and girls? Jensen, ladies, everybody on the planet. This is your boy MC Fire. Today is a beautiful day. Why? Because we get to talk about our favorite, the markets. Yeah, absolutely. And we're by the markets, I mean everything that suits your fancy. So if you got questions on whether it be forex or you have questions on a particular stock, we do fundamental analysis and technical analysis. My whole thing is about getting the systems to set you up for success. So without further ado, we're gonna dive right in. And if you guys have questions about any in particular stocks or anything you want me to check out, we can dive right in, right? But for starters, let's, as we always like to do, let's take a look at the overall general performance via sector on what's going on in said market. So as you can see, so far the market's been bottom left, top right, in a pretty general, consistent way, right? Now here recently, there has been a lot of volatility. It's almost like, the end there, the market got scrambled, right? And so some things went up, some things went down. You're seeing financials kind of take off like a rocket. Info and tech taking a huge drop. Communication service following suit, right? Those are primarily your leaders, right? So we're gonna deselect all the ones that are not the leaders, so we can just kind of take a peek at kind of what's going on here. These are your leaders, and they're kind of going in tandem with the market, except for primarily financials, right? Financials is seeing a little bit of uptick. So, what does that really tell you? That really tells you with the data that which sector is actually showing strength when there is relative weakness in the overall market. So when you're talking about looking at plays that power could be kind of shifting into or maintaining, if you're already in, let's say, financials, you would say, well, I have a strong case to maintain my current positions, hold them. And if I'm in other sectors that are generally tracking with the S&P 500, might be a good time to look at them a little further, get some research, maybe dive into some news and see what might be the primary reasons why they could be falling off. It's just something to think about as you see the data, right? So those are your top tier guys. These are the ones we watch a lot of times. We're gonna take a look at utilities and healthcare. So utilities is tracking just fine. Let's get rid of them. Yeah, utilities is tracking just fine, but healthcare is absolutely tanking, right? So your United Healths and other things in the XLV, that definitely you'll see that drop. We're gonna go back and get our chart set up here. All the commercials want to talk, but that's fine. We'll just go down the list here. Right, so this is what we've got. Industrials, get out of there. They're at the end of the list, right? So utilities, and if so, you're looking for a position that might be in a good buying opportunity. It's already low for a long term buy. You could probably look in the healthcare field. Of course, we're waiting for the trend to change and triggers, but it's something to kind of put on your longer term radar. Talking about a year, 6 months out, because it did take kind of a dive. Next on the list is energy and real estate. So energy, as it stands, is kind of the laggard of the S&P 500. If you look at if you look at how it's broken up, it's kind of in a mixed bag there. Some are up, some are down. It has since kind of seen a pop as the market popped, but it kind of tracks with the S&P 500. The real estate market's kind of doing its own thing. I can't really say it's a honey badger, but I can say while the market was trending up, it kind of just missed that whole move. So that's the light gray there for the real estate. In the energy sector, would probably be represented by the XLE. In the real estate sector is the XLRE, right? So shout out to them. Then you got consumer staples and materials. So these I kind of sleep on them, but if you notice, there's a reason. Is because when the S&P is rallying, these things are not really kind of taking off with the market. So in general, we kind of want to go with the flow of the river, and If I'm being concentrated, I want something that is at least beating the market. And when the market's rallying, ideally, I don't want it to be a slump. It would be different if it went inverse. So while the market's rallying, it's kind of going down. And if the market is going down, it's rallying. So you can kind of play on the volatility there and not and kind of diversify that way. But this way, you can, so there's no direct correlation or direct inverse correlation. You could play this as if you want a different flavor from the S&P. Don't know why you'd want to do that, but that's something you can think about, right? Sweet. Phone going off there. And then we've got the last two, consumer discretion and industrials. So these are almost in direct tandem with the S&P 500, right? Sometimes it falls below, but almost industrials, if you notice, is there really like tight correlation? Is pretty tight. So what is that telling you? Things are tracking pretty smooth with the S&P 500, and is really being driven by the industrials. If the industrials start tanking, it'll start tanking. If the industrials start to rally, it'll start to rally, right? It runs almost neck and neck right here, right? Neck and neck right there. S&P might push above, or the industrials might push above, but really kind of going together, right, in tandem. You've got consumer discretionary, really feeling the dips. So as the market slides, if you notice, consumer discretionary really takes a beating. So if you see the S&P start kind of moving, and it catches a sniffle, right, the consumer discretionary is going to catch a cold. And this is where, looking at it from this perspective, you could say, okay, if I want outsized returns, or I want outsized gains, this is kind of where, to the downside, I can kind of catch that. So when the market starts really ramping up, consumer discretionary really kicked into high gear. But when it really starts to fall, consumer discretionary is going to be behind the market. This is a good place for you to hunt down puts as it goes into the market, right? For potentials to the downside. Let's not forget, we've also got the Fed and the Fed Watch tool. Gotta revamp this, so sorry about that. So you got the Fed Watch tool, target rate probabilities for the 18th of December. As it stands right now, current range is found right here. That's where we are. There's a 40% chance that it will stay that way, but there's a 59.9% chance that the analysts are saying that this could be dropped a little bit. So this is a good website. You can track this down yourself. It's CME Fed Watch tool, and it's just a good way to know when the next Fed meetings are. I guess the one after that is at the end of January. But yeah, the next one we're looking for is the 18th of December, right? So that's something to watch out for. So let's gonna dive into some of the plays here. We're gonna go through our in plays first, and we're gonna go. This is a Sunday video, so it's one of our more lengthy videos. So sit tight along for the right, and this is a good video or a good day to ask about what in particular you guys want to talk about, whether it's any of the indicators. This is a good day to explain that, or any of the potential plays to look at it from a fundamental analysis. We're going to be toggling back and forth between the actual what the charts are looking like and the fundamentals for that chart, and maybe we can deep dive under the hood. But today is a day that we deep dive under the hood. So without further ado, let's get into it. So at first we have Striker. We are into this play. It's currently up a lot. We have since taken some profit off the table by kind of rolling, and it was outside of the options, or outside of the earnings. So once it popped past earnings, and we got a trigger to go ahead and take that trade. A stop was going to be below 351.50, and we were looking to take profits as it broke around the highs. It really kind of pushed, so we kind of took the profits the next day, which is really good. And then kind of it's still kind of rolling to the upside. So we're kind of looking for it to cross the 400 benchmark there. That's kind of where we'd be looking to reassess what's going on here. If we take a look at our insight tool, where we can type in Striker, show guys here in a second. SYK. And we can kind of do a miniature brief snapshot deep dive. Okay. So on the Fed Watch or the Insight tool here, we have on the year kind of been up 31%, revenues increasing, free cash flow really increasing. So when we're looking at the fundamentals of the company just by a revenue perspective, liking what I'm seeing, uh, it might, as you can see, revenue kind of happens in cycles. So just keep in mind that if revenue starts to slip, you could see a slip in the price. There might be a correlation, a direct correlation. We could deep dive into that some more if you guys would like, but that would be kind of a special request. We could take a look at that. Net income is also increasing. So fundamentals overall are looking good. Cash on hand is increasing, but also debt is also at some of the highest levels it's been in a minute. That could mean that with their cash and their profits, they're reinvesting into the company. That is kind of a healthier sign that I like. So it's something to kind of keep in mind and track. You do have, we're going to expand this. It does offer dividends. So for all you dividend investors, if you're looking for something that's potentially been adding dividends for a very long time, since 2010, it has been steadily stair-stepping its dividends. This is why we look at this from both perspectives. We want to know, is this a potential play for the long term, as well as catching some short-term volatility? Because sometimes good companies go on sale, and when they go on sale, you need to know what's a good company, what's not a good company, and kind of pick your battles wisely, right? I don't want you to tell me to buy it when it's up here, kind of like to catch it on the dip, but you know it's a good company. This is one of the clear signs of the dividend being as strong as it is, that this is a pretty good company. And the free cash flow, the lifeblood of any business, being as high as it is amazing. So from a fundamental and a technical standpoint, that play to us just kind of made sense. We took it and it's profiting. And it kind of shows in the earnings too, but you know, it is what it is. I'll be back over to the chart there. Next play, one of my favorites, Palantir. We have been a long-term holder of Palantir, kind of at around this level, around the $10 mark. So really held through here. We've taken considerable amount of profits at the $25 mark, as well as some up here and even up here. So, and you'll see why we're looking to maintain this in our portfolio for the foreseeable future. As we get off Striker and go to Palantir, PLTR, boom. The fundamentals are a lot different for Palantir. Doesn't offer a dividend, but something you'll note that is, I think, extremely healthy. This is just a cash cow business, right? Currently, cash on hand is 4.5 billion of free capital. We can kind of research on what they do, but Palantir, if we go down, we can see some of the articles of the company's profile, and it deploys software platforms for intelligence communities in the United States to assist in counterterrorism. So I wouldn't say necessarily they're like a government contractor. They are a company that deals with using AI to really do metadata and finding where the next like terrorist attack would come from. So if there's no terrorist attacks, they're doing their job. So that's kind of one way you could play it, right? Cash and debt really high. Revenues increasing a lot, right? Just a nice bottom left, top right chart for Palantir. You can kind of see under the hood here on why people are starting to find this company very profitable and see it as maybe a long-term growth. With that kind of revenue growth and that kind of cash, you're not really going to see a lot of how can I put it, it's not in really risky waters. So the EBITDA went pretty positive in the fourth quarter of 2022, right? So all in all, not really too much bad things to say. And if you could catch it on sale in 2023, notice that the EBITDA started doing good in 2020. So back here, oh, you guys can see the chart, I'm sorry. So the EBITDA started kicking positive in 2020, which was back here. But if you notice that the price kept slipping. So it kept slipping. So from a fundamental standpoint, when we were tracking it, we were like, hey, this is actually really, really amazing that this company is kind of on sale, and it's kind of trading down. And the founder also is somebody to kind of keep a note of. He's one of the, you know, he's in the club with like Meta founder Mark Zuckerberg, and Tesla's founder Elon Musk, who's, currently working at, for the State Department. And so the founder is it kind of in that cohort, and went to school and grew up with those guys. So it's kind of cool. And it's now since made a extremely profitable company. The stock's gone parabolic and is getting massively volatile. But people want to get in at $65 a share. Could see this growing a lot. Not sure how this compares to the market cap of what this company is going to generate over the long term. But right now, the indicators show hold it, hold it, hold it. So there's that. Next one we want to check out is the Disney. Disney recently went green. Back here, we didn't necessarily get a like daily trigger to go ahead and take that, but if you notice from Walt Disney, it went on sale. So this long-term company went on sale, and catching any of these longer term uptrends would have made you a pretty nice profit. The last time it went green was here, would have made you a nice profit, and here definitely would have made you a nice profit if you've got in on the trend change. Even here, if you took the trend change, it would have been a little late. Now, moving averages crosses are definitely going to be a lagging indicator, but you're not really trying to catch the pipper, right? You don't have the computer services and the speed to kind of catch the pipper on when things are going to be switching. What I would say is if you want to be on the cusp of every play, lower your moving averages to more than this, right? We have our moving averages at not the Kelder channels, but the actual moving average clouds at 8 and 21. So any lower than that, you're kind of pushing it. So 8 is kind of like your power trend when things go into a very steep, powerful trend, and the 21 is kind of just a benchmark market average that everyone kind of uses. So you got one fast, one slow, 8 being the fast one, 21 being the slower one. And once they cross, you're in good waters. You're in good hands. Now, traditionally, I would have said, okay, you got a green cross. It's now in an uptrend. Good for it. But once it crosses the high of the previous week, you could potentially take this play. It crosses it twice. Once here, kind of tests it. But here, definitely cross. You could take this play. And then you see that we're getting an indication that the play has a potential to continue as it breaks the high. So if we kind of put just a general arrow on where you could have bought it, find out where that lands, kind of puts you like right here, and there's your trigger to confirm, yeah, there might be some follow through there. Also, earnings, good earnings doesn't hurt. So Walt Disney, every princess's fantasy come true, and there it goes, steeple. Now, if we go look at Disney from a fundamental standpoint, you'll see that Disney isn't looking too bad, right? Prices kind of, they say buy low, sell high. Well, now the price is, I guess, pretty high, the like 109, 115 range, and it got all the way down to like $88 for the name brand Walt Disney. This is what we're talking about. Find a name brand that's struggling price wise. Get out into some hot waters when you start hearing bad news, and you start hearing the trend. You start seeing the trend change. Put it in your long term tracker. Make indicators for when the moving averages cross to give you a heads up. That is one surefire way for you not to miss any of these plays, right? If you're catching Walt Disney when it crosses, you're taking some long-term buys, you can catch these moves. At least it'll help you not buy the tops or buy the news. You're buying really good fundamentals. So free cash flow is actually popped a lot. I guess they're cutting down on some debt here, which is good. Maybe I think they had some layoffs and move some things around. Disney, right? You also have streaming and subscribers. Is it increasing? with their Disney Plus, you'd say it's kind of maintaining. Yeah, Hulu, Disney, Disney International, Disney Domestic. You kind of see how it breaks down overall. A lot of their revenue, I guess, would be coming from primarily Hulu, right? At 52 million, makes a pretty nice chunk. Um, 52 million. Oh, excuse me. You have Disney Entertainment coming in at a cool 66.7 million. So really, Disney is the bag, which makes sense, right? But Hulu is doing pretty good, and Disney Domestic is doing pretty good. So Disney International doing the best there. Shout out to Disney International. Um, what else do you got? We already went over free cash flow. So yeah, and also revenue. Let's take a look at the long-term revenue growth. Still kind of increasing, so that's really good. I mean, you got COVID in here, but still kind of increasing. And the beautiful news is, you like to see that companies whose revenue is steadily increasing, if it goes on sale like that, you want to pick up some shares when it's at the dip there. So watch out for that. If there's another dip opportunity buy, we'll probably take it. But we'll go and we'll let the market tell us what we should do. You don't have to catch every play, but it would have been it's nice. AEP. Not really necessarily interested yet. There is a strong uptrend and there is a strong case for this buy here. As you can see, as it pulls down from this very wide rotation, I don't mind the wide rotations because I'd rather get bigger winners. It does respect this pivot here. It does respect it. So as it respects the pivot, um, not enough for me to necessarily take it, but if we see some other indications, that could be potentially a good position to take a play here. Okay, we'll get rid of that. But yeah, we'll be keeping an eye on this one. We definitely do want to see though if it breaks the low here because we got an indication that people might be looking to step in, but if it breaks the low, you know, let it go, right? That's the old adage. PG. Also, kind of same thing. Here in PG was definitely an opportunity for you to take for continued follow through. It's kind of not out of hot water yet because it kind of just cross thread slightly. So just like literally, I'm like, okay, if you're going to be a buyer, it's kind of a mixed bag for me. The being a buyer would have been back here on the 8th of this month, then in November. But seeing that there rallies here and that it's kind of fell into a slump, I would watch it to short the rally, not actually take the buy. I know, not betting against it, but I would say that currently right now it's not necessarily in a good place, right? If we go ahead and put a few of our pivots here, we'll just start. Actually, we'll go and do it correctly. Let's do this. We won't go all the way back there, but we'll say, okay, there's one pivot, double touch there. That's pretty good. Major pivot right here. Now with this one, it has some pretty drastic breaks of the pivot, huge wicks right here. So we might have to dial that into the daily chart to see if we can't find a real edge in the daily, because it's really pivoting a lot, right? You get a baby pivot there, but you almost can't even count it. And then you've got, of course, the all-time highs here. I like to mark that in red. I like to know when things break the all-time highs, no matter what chart we're on, whether it's a 5 minute, 10 minute, or the daily. I like to know when it breaks highs. I'm keeping the chart really clean. As you come down into fair value, it comes down into fair value. I like to keep the chart super clean. Don't need a lot of lines. I just need to know where people are willing to step in, where price respects a certain level over a long period of time. Kind of get out of the way. Don't have to catch every move, right? So if let's say for example it does break, I would consider that it's breaking through fair value, right where the price likes to be, and then at minimum we'll trade down here. So you're looking for like a 1-to-1 down to the downside. with danger area being kind of in this zone where it's wicked down twice. So we'll put the wick danger area. We'll mark that yellow. We just want to know where it could potentially. This is where you could almost say, okay, I'll pull it off if it's for a nice 2 to 1. Looking for a nice 2 to 1, right? If we go look at PG on the from the fundamental standpoint, right? So PG from fundamentals, Procter and Gamble, right? Free cash flows, okay, and you're looking at dividends to see if it's been increasing or if they had to cut it. Nope, it's been increasing. So you're almost looking at a dividend aristocrat because it's been going since like the 1970s. This is something to look at, right? Most people don't even know. But as it comes on your radar, it's good to know. Hey, this one can be really good for a dividend investor. Um, right? The stock is at $169.54. So it'd be a pretty penny to get it, but you can always get it at a discount. We've got free cash flow. Let's take a peek at that. Kind of choppy, but free cash flow has been extremely high since the 19, I guess, since here, right? 2000. So since the early 2000s, free cash flow has pretty much exploded and been extremely high. Always been net positive. Looking at free cash flow being 3.331 billion. It's a lot duckies. So definitely something to look out for. Cash to debt. See how healthy it's been over the long term. Over the long term, yeah, most of this debt is not even capital lease. So most of this debt is is something that they could. I'd say they can't really just necessarily get it off their books, but it is something to note when you have enough money to pay your people, and where you put that money and shift it around could be very very interesting. But again, that is amazing free cash flow at 3.31 billion. So back to the charts there. You've got AWK. Now AWK, we've been watching American Water, and it's definitely setting up for potentially to sell. Right, a lot of indications that people interested to sell, and it has since trend changed for the downside. So what we like to do, the overall mindset that we have is if there is a trend change, I'm not necessarily going to take the first play in the trend change. I'm not taking the cross. I'm taking the rally in the cross. Or if you have a buy, I'm not necessarily wanting to take the first buy. I'm looking to take kind of the dip into the buy. So we change the screen, indicate that we want to be a buyer. We scroll through here. Let's see if we can find a position to buy. So your first indication that there might be buying in, if in here is, I'm gonna kind of scroll out, is there's your trend start here. So push this back a little bit where the green starts, but there's your trend start around here, okay, and then it goes up, takes a dip, and then there's our first trigger to buy. So we're not necessarily looking to be crystal perfect. We're looking to play to the strengths of trends. Buy the dip, short the rip. But before you can buy the dip, the trend has to change to an upwards trend, an advancing trend. So we want to at least be patient. You don't have to get every move, but you do have to get the right moves. And that play ends up working out extremely well, as you can see. You even have a blowout candle here, and it gets washed. It's a good opportunity to take some profits, roll it, whatever you like to do. It doesn't really breach past that again, so this is definitely an indication that, hey, from here to here, not a bad play, not a bad play at all. But as you can see here, we could see a potential play at 131.7. If it breaks that low, definitely could be a good juicy play to the downside. So that's the level. We'll place it there. Full transparency here, 131.71. Break of the low, we'd be looking to say, let's go. Outside of that, yeah, that's pretty much what we got for American Water. Uh, if we go take a look at, is it in hot water? Um, American Water and Hot Water. I like that. AWK. Then this is why we could see potentially it's having problems. So free cash flow is down. Revenue is still up though. But again, free cash flow is the lifeblood to any business. So let's look at the long term trend right here. It's kind of choppy, but here recently it's been unable to really break the top side, and even here, if you're looking back, not a lot going on as a regard to free cash flow and being that positive. So really, when you're talking about blend of water, this is what I'm talking about. Free cash flow is struggling. Debt is very high compared to cash. It does have dividends, so they're finding money somewhere to go ahead and give to people, right? But not liking necessarily the free cash flow being negative, and not liking the debt to cash ratio. So definitely watch for that on the Pipper. Let's see if the expenses are actually increasing. They are. So its expenses are increasing considerably, and you don't have any free cash flow. That could be something. It could be a kind of a red flag there. There could be something extremely wrong. So yeah, look to potentially take a play there if we see any more danger coming from, or bad news. That could be a catalyst. Moving on to Johnson and Johnson, J&J. It recently did go trend red, right? Early trend red. So if there is some rally that we could potentially short into, that might be something that we could take a peek at. Because it's too early to call, I would say. It has been tracking in this channel. We've been watching it for a little bit, and so it's right around a juicy opportunity to. It's already downwards trend, already rallied up into that stage one advance, or stage two, I should say, and now we're kind of looking at the decline and potential follow through off the rip. So definitely looking for a potential break here of the low, and like how would we set this play up? We are one, maybe two bar professionals. So if it breaks the low of this, we would be looking to make our stop at the top here, 154.54, right? One candle, okay price moving around $2. It might be looking to take it off kind of at pivot lows here. It has been tracking pretty wide, but these wide burst drops will be in the thrust of the move. So looking to hold it at least till it gets to pivot bottoms here. Maybe even this pivot bottom, right? This is a kind of a danger area, so we'll mark that up. And in that analysis there, we can look at the fundamentals. Maybe there's a reason why Johnson and Johnson is struggling. Long-term seller of everyone's finest baby products. All right, so let's take a peek at that J&J. Who doesn't like baby formula, right? It ran out though. So you've got the price is down 3%. Let's take a look at long-term revenue growth, right? Lifeblood of any business. Not looking too shabby, it's kind of up and down. Now dividends are there, which is good. With the stock price being of 154, you got a major dividend aristocrat here. So there's two ways that I could see you playing this, right? You could be averaging down when you get certain buy triggers off the bottom of the range, and just average into this play if you're looking to have a nice dividend stock that's gonna is gonna grow. How would I do that? So you've got the range here, kind of starts over here, but if you're gonna average at the bottoms, you want to buy low, sell high. So any kind of trigger, let's say the first trigger is here to take a buy. And so in other words, if you're already gonna be buy conscious, or you have a buy biased, just taking any trigger is not what I'm looking for, right? I'm not looking to take a trigger at the top of a range. I'm looking to more take a trigger at the bottom of a range, right? I'm looking to take that trigger at the bottom of the range. So any break of a massive selling, right? I'm looking to take that buy. So let's say right here, we can go ahead and put some arrows, not circles, but arrows. I'll put them here, boom, right? There's one arrow. We'll make it gold, and then we'll copy from there. So if you see on the chart, on the weekly chart, this is where you're catching that buy after trigger, right? It's at around the 3 ATR on the weekly, 3 ATR on the weekly, right? So if you're looking for a bounce, it taps 3 ATR, you get a nice trigger here. You can check, break, alert there, and then boom, you take the buy, and it does rally considerably. Also, baby trigger here, but there's some follow through there. And then even if you're trading for short-term volatility, this is, I mean, you see something like this, there's a real fight going on. Whoever wins that, it's gonna move, right? It's gonna move. So, and then there's another indication, let's say here, tapping 3 ATR again, right? And then another trigger to buy. So if you're confirmation bias, the thought process is still kind of the same. Hey, you get to 3 ATR, okay, I'm looking for the bounce to happen. I want to buy, relative absolute lows there. Not the line, but the arrow. Thank you. Sorry, guys. But essentially, you want to be a buyer when it's convenient to buy. You don't want to be a buyer. I said I was going to copy that arrow, didn't I? Let's get rid of that. You don't want to be a buyer of it when it's at its high, relative highs. You don't want to be a buyer then. You want to be a buyer when it takes a dip, and it needs to be on your radar. You kind of gotta know, like, hey, I'm watching this one. I want to get into it. I gotta be a little patient, right? These two buy triggers happen over the course of like months, right? Multiple months. So March going into October is kind of a long term, but getting a nice juicy average off the bottom is good if you're looking to be a buyer. And that's kind of what I want to key in on is so many people want to tell you about something when it's at all-time highs, but what about when you're buying something on the average and waiting for a timeline of like 5-10 years, right? Oh, you guys didn't see any of that. I'm sorry. So what I was illustrating, long story short, I might have to edit that. There's a couple buy triggers. There was a couple buy triggers here and here on the weekly. And we could see that from it tapping the 3 ATR section, right? Tapping it and then breaking. I kind of explained that just now. Same thing here. It tapped the 3 ATR and then it kind of bounced. And then that's kind of what you're looking for there, right? You're looking for it to tap 3 ATR, give you a heads up. Up here, same thing. Like if I just put an arrow up there to identify it. There it is, right? There's your arrow. So this is up there in the 3 ATR territory, already a little extended, and then you might get a trigger, to sell at the break of one of these. But there's a real battle that happened here. A lot of volume that stepped in. A lot of people fighting for price. Whoever wins that, it's really going to move because there's going to be a lot of unwinding of the position, right? And the sellers won. And it fell. So it fell pretty hard, pretty fast. That's why the downside is the thrust. So that's why as we move forward here, this is what we're looking for. We're looking for that to continue and maintain this trend, right? As you can see. Shout out to it. Next play, CL. So we have CL here, and recently did go into downtrend, right? But what we're looking for is a trigger to kind of take the play, right? We wanted to see if it was gonna buck the trend there recently, but it really didn't. So now, with it being really established downtrend now, we would be looking to short the rally. We'd be looking to short that. So we really want to see if it can break below 91.15. If it can break below 91.15, it's already fallen so fast. So it's kind of in hot water territory. We want a little bit more of a rally. Let's see why it potentially dropped so far. So let's go look at CL and check how much money they got. So a little bit same situation as Johnson & Johnson, Colgate. stuff, toothpaste and basically healthcare products. You have free cash flow is okay. It's pretty good. A lot better than the previous one that we mentioned. Dividends, kind of same thing. I believe it is a dividend aristocrat, right? Absolutely growing in size for 93.53 in price. You could come up with a plan for that. So if you're looking to be a long-term buyer, right, maybe waiting for the trend to change could be good. We looked at cash to debt, really. It's a really big company, so you got to think the amount of scale that it takes to be an industrial company and provide toothpaste to the entire world, right? You might have to just pay for it now and ask questions later, right? Absolutely massive. And there you have it. There's Colgate. Not too much to say about it because you're looking for to catch the move, but this is in the danger zone. I don't really we don't really like to short down here when it's tapping 3 ATR. Buyers are stepping in, but if they get washed, then you can be like, well, I might want to be in that position if it really starts to drop. But something that I wouldn't touch necessarily. This is something that I probably would touch though. You have EIX. Now EIX, right, recently threw a buy trigger and it's really respecting that. So this is what I'm saying. Like you're in an uptrend, it kind of takes a dip, and you're looking for a reason to take that buy. You might get stopped out a couple times, right? You might say the rally might start here. You just one bar professional that puppy, stop out, take your licks, and then get into the next play. So if you got into this play, you probably got in about 4 days ago, and then it's since now pushing to where you're at least in the black. Where would you want to take it at? Make a decision at around 86.35. That's what I would probably try to do, and then make another decision at 88.77. Just kind of really taking the risk off of the board, so that I get in the play for free. I love that play. Just rolling and getting in the play for free and getting that. But at least you could see, this nice Harambe pattern here, and then a potential follow through. So this definitely is a play to be watching out for. EIX is, let's see here. We've got EIX really nice on the price growth over the year. It's been up 15%, which is not bad. The S&P 500 has been, kind of chugging along. So this is actually not bad. Let's see why. If we pop the revenue up, been pretty good, right? We're looking at all time. So as far back as 1985, but the revenue growth has been pretty extensive this quarter of 2024. So kind of approaching all-time highs. And what you can expect to see too is how well does the peaks and valleys, you can compare and contrast between the peaks and valleys of revenue and price. I think there might be a tool on here to compare that. We might set that up or figure out how to do that. But revenue versus price, free cash flow versus price, and to see how well does that correlate. Dividends, kind of can't really say it wasn't steadily increasing. There was a considerable dip in the dividend from about 36 on average for the last couple quarters to 25 cents. So, but now it's since grown considerably, kind of maintaining that, I guess, as you can see from the third quarter of 2014. So, kind of on a freight train there. Can't call it a dividend aristocrat, but you can say that definitely they're giving you money and not really leaving a lot on the table for themselves, indicated by their free cash versus debt. You can look at free cash flow here. Not something that I would want to put in my portfolio long term. That it's just not like you're looking at, is this company going to be around to pay me in 50 years? So if you look at this chart, would you be like sold? Really, I wouldn't be, right? So that's kind of where we're getting at. And then what does this company do? S International, do its subsidiaries generates into distributes electrical power. It delivers electricity to about 15 million residents. Power company, right? Easy day. can learn a lot from this site. I really like this site a lot. All right, next is EXC. Now, there was some potential here. Had to get out of that puppy. It just kind of went against us. We want to be that two bar professional. So definitely had to get out of that one. If it throws another buy trigger, we will take it. But as it stands right now, it went in the uptrend, took a little bit of a dip. We saw the dip, and we're like, hey, let's take the play. And Brutus does, straight backstab. But that's okay. We don't mind because every play has its day. We're not going to spend a lot of time on this one. It's just here, and if it gives us another indication, we'll take that. Maybe it has to diffuse a little bit from 3 ATR and take a break. So we'll be patient. We'll be more patient on those. Nike, though, is absolutely struggling, right? They are having a real tough go at it. I guess sales have been kind of slumping. And when you see, I mean, obviously from 179.1 to where it is now, if they can get their act together, long-term potential, like throw it in your portfolio, but some things might have to change. Let's see if this company is worth salvaging. And this is what I'm talking about. If you can find a good company, right, name brand, and it has decent fundamentals, and it goes on sale, this is what I'm saying. This is where you put in your portfolio for the long term. As you can see here, been adding a dividend pretty consistently since 1995. So, do they know how to run a company? Yes. Is it a name brand? Everyone knows Nike. Really kind of made famous by track runners and this, that, and the other, right? A lot of people like their gear and their shoes. Cash to debt, right? I like to look at this indicator because I like to understand if people start calling in the debts, do you have enough cash to really, bat them off? You might not have a lot of free cash, but you also aren't owning some bank that's going to get bought by some corporate raider and call that in, right? So it's I would say it's okay. We're going to last, let's go 2 years. And so the cash to debt is kind of on par, right? So they can cover most of their outstanding debt, but their capital lease debt would be a little rough, right? So capital lease debt, they'd have about $3 billion outstanding, and that's okay. You could sell off some of those liabilities and hopefully recuperate that. But yeah, Nike, long-term company, good revenue. Let's see how it is. Not too bad. It has since had a slump in revenue. So if you think that Nike hasn't had a slump before, it has. 2008, it also had a pretty drastic. I mean, you can probably guess when that was. Consumer buying kind of slipped, and then here in 1997 started the slip in revenue. But you would have had about, I'm going to put it, a good 8 years to be buying Nike and catch all of that revenue growth there. And that's kind of what if we go back to the chart here, it's kind of what it reflects, right? If we kind of zoom out here, double tap, we'll go see how far we can go back. Right now, this is 5 years, so I don't think you can go back farther than that. You might be able to. Is there any? Yep, you can actually go back 15 years. So let's try. Go back 15 years, right? So yeah, massive growth, and the price really reflects the revenue, right? So the revenue growth, but it's really on a discount right now. I would say look for the trend to change, and when it does, you could potentially see some nice gains, or some really aggressive selling. Look at the average down when it starts hitting that three times moving average. Kind of recently did it here of 729. But right now the trend is still down, so you can make profits on the way down as well as look to buy the stock when there's an opportunity to. But as it stands right now, Nike in hot water. If I was going to take this play, it would be at the break below 75.56 with a stop of 77.86. Looking to let it ride down to 3 ATR, or at minimum make a decision at pivot low, right? that would be the play. So that's something definitely we want to watch out for is the Nike PM. Philip Morris looking good. There was actually a nice buy trigger, kind of 4 days ago. We're not taking a lot of the newer plays. We've been watching these and seeing them, but we're kind of resetting the portfolio and have to rebalance. So I'm kind of letting it play out gracefully. I'm missing a few plays to kind of let my portfolio play out gracefully so we can close some of the positions that we already do have. But yeah, there's definitely a buy trigger there at 126.99. So I would be looking to let it go if it stops out below 123.48. Really never really got below that, and it has since been pushing back to highs. Be looking to take it off or make a decision at pivot highs. Let's go check out what Philip Morris is doing on the fundamental side. PM, uh, PM Philip Morris here. Nice revenue growth. Free cash flows there. It's kind of spotty though. Dividends. Let's see how much dividends for all you dividend investors. Boom, all time growth since 2008. Been offering a dividend and didn't really slump it until it got into hot water in 2012. And so since then, it's been rolling. So as you guys can see there, a little bit of a dip by there for Philip Morris. Cash to debt, though, is a little rough, really rough and increasing. So, but let's see, is that due to some debt? Where's the debt ratio? No. Expenses, here it is, here it is. Um, there's a little bit increase in expenses, but yeah, like they really cut expenses about half in 2022. So I'm very interested to see how they, if you're cutting expenses for a company that's good, that's your accounts payable. Um, Net income, let's see how that's doing. Kind of steady, right? But here recently, it's at all-time highs. So more money equals more money. I think we did. If we hadn't did revenue already, yep, there you go. So, um, relative highs for revenue, right? All right, let's go on to let's see what's on next on the list. I hope you guys are liking this because I like to take a very methodical approach to some of these and kind of reset as we go into the new year. We got a couple months, so you want to see what you can put on your wish list, right? That's really what we're trying to do is see in the next year what we can put on our wish list. There was a situation where you could have took the buy trigger, but it's right literally right before earnings. I don't too much care too much about earnings, but for those who do care about earnings, we're probably going to put together for something about how to play earnings. There's a specific way to play earnings. I wouldn't necessarily just uh, kind of buy naked options when it comes to earnings because that price volatility is already priced in. But the crazy part is there's some plays where you can still capitalize weather earnings. I know a lot of people they don't even trade during earnings, but there's just low cost, high reward opportunities for capitalizing on earnings that we do like, right? So definitely got a blowout candle here. You would have held this play maybe for 4 days. You would have been taking it off anyway, kind of at the highs because that's your previous pivot. So you'd be looking to make a decision or roll it or whatever at or relative highs for PCG. PCG. Boom. So we're gonna kind of take a peek over here under the hood. See what we get. PCG. Free cash flow. Look at that. What bam. Now, I don't know what is the reason. Maybe they had a new, something new, maybe new news, a breakthrough of some kind, something came to market. So let's see what kind of happened there news wise. Underground milestone buying more than 800 miles of wildfire risk area. So let's see what do they do. P&G Corporation subsidiary Pacific Gas and Electric engages in sales and delivery of electric and natural gas to consumers in northern and central California. It uses nuclear, hydroelectric, fossil fuel and fuel cells. Yeah, so basically power, right? They're a power company, and shout out to them. It has been it has been providing a dividend, little slumpy, right? But right now it seems to be increasing. It's been increasing since, I mean, you could see it 2006. So not bad, right? Not bad at all. And the free cash flow I guess they had a major breakthrough because they're doing some buying here. P&G launches first commercial deployment of on-site generative AI solutions for nuclear energy sector at Diablo Canyon. So they're incorporating AI to do efficiency maximization, and I guess that pops the free cash flow, right? Which is good because we want to be efficient. Moving on. So yeah, it is in a juicy buy. Well, it was a buy a couple of days ago, right at earnings, I should say. But we're moving on to Wally World. So Walmart in the stratosphere here. It has been in a, I will say this, it has been in a very strong power trend. But when I'm looking at something like Walmart, right, I'm not looking at it from all time highs. I'm looking to want to get it here. So what is this? This is 8.5. Let's look at 8.5, and you'll see during 8.5. Let's see if there's an opportunity to actually scoop this thing up for the low. So 8.5 is kind of right here. It does break the high, but it's not necessarily. I would want to double tap that, right? As you see, it taps, pulls back. It does that sometimes a lot, so that's something that you could be kind of like if you're watching on the day. But there is a very clear indication to take the play right before earnings. If you negate earnings altogether and just say, I will just take it or not take it, barring earnings, you definitely would make and start getting a massive rally. But you kind of got a heads up on the rally based off the trigger, right? So the trigger triggered before the earnings. Maybe somebody knew something, we did it, right? But then there was massive follow through, even broke through here, and has been in a very nice power trend ever since then. Kind of maintaining this long term weekly trend, right? Walmart is doing pretty good. Remember, Walmart added a kind of an Amazon-y portion where you can go on Walmart's store, just buy things from online. People also like the aspect where kind of you help the gig economy because people can go in the store in Walmart and put it in your box or bring it out to your car. That's a thing now. So kind of really nice. I think a lot of places are starting to do that for the gig economy. Let's go look at some of the under the hood of Walmart. If this is a very very big company, so it'd be nice to kind of see where the chips fall. Remember, all these reports they kind of have to disclose and they get audited. There is sometimes you can slip some stuff by the SEC, but a lot of times you're not gonna be able to hide this stuff for long, right? Dividends, very very nice at $84 and like 25 cents a share. Pretty good dividend, I'd say. Shout out to you. And then cash to debt is, I mean, it's Walmart, right? You're gonna have it's name brand. It's not going anywhere. Can we go 10 years? I'm about to say there's more than that. So yeah, it's never really. If you look back the last 10 years, Walmart's been plugging away fine. It's always had more debt to cash, so that's not almost not even a factor. What you really want to see is a free cash flow and the revenue. Are you making money? So yeah, free cash flow doing pretty good. Um, the margins for a company like Walmart are actually tight, so they do need to sell a lot in volume. And here recently, there's been a lot of nefarious activity, and Walmart has had to close down a few stores in nefarious locations. So, nice pivot for Walmart, going from that Q1 and Q2, Q4, excuse me, of 2023, and Q2 of 2024 being negative, and in between that getting free cash flow. Revenues though should be pretty cyclical. They are, but maintaining kind of an upwards trajectory. So Walmart is growing, and the online portion definitely helps. We might deep dive later into, like, if somebody really has a question on where the revenue is coming from. I think that model is on here, where you can compare what's doing the most selling. Is it their online business, or is it their either stores, right? So, but expenses, um, not looking too bad, right? Not looking too bad at all. So shout out to Walmart and Sam's Club. Back to the chart. Yeah, kind of going parabolic. We would want to dip like what we saw back here. It would have been nice. TLT, good old bonds. Not looking too hot for the bonds. Has since started to slide. Definitely, there was a trigger back here to go ahead and take that position to the downside, and you didn't. You got close to getting stopped out, but you didn't get stopped out. We like to respect our sellers, so we respected that, or even take the pivot. No more than ever 2 bars of being a professional. Most of the time, I only do one. If I take my stop out, take your stop out, keep going. There's going to always be another play. With the right edge and the right rules, you should be just fine. Um, so TLT, also watch out here at the bottom, right? It does look like it's starting to go rotational. I'll draw that out here. So if the TLT goes rotational, right, then you'd be looking to kind of reverse your triggers, right? Once you see, you'd be looking for more buy triggers, really. And that's kind of what I want to key in on. Watch out because I even, put that one yellow because I was like, hey, this thing could be going rotational and there's a lot of resistance up here. And like clockwork, it did. So just watch out for it being rotational. You could play this 2 ways. Let's say you want to get into TLT. The upside, well, maybe it breaks above this range and it really pushes, or you kind of buy the bottoms here. Not necessarily my preferred method, but it works, right? Because you're hoping that the rallies up to the top of the rotation, but I would be more looking for the push down, right? If it breaks a certain level, and look for the push down. Rotational triggers are a little bit different than trend triggers, so just keep that in mind, right? Just keep that in mind. Cisco, ooh, right? Cisco in that info and tech, looking mighty strong, but coming up here into the danger zone. So something to think about, right? Danger zone for like all-time highs, right? Just take a long, very, very long head and shoulders pattern. uh, the shoulder one, shoulder two drop, right? And then you have one, shoulder two, and shoulder three potentially. So just watch out. This is definitely a danger area for sure. We can extrapolate this forward here, right? Boom. That's all the way back, right? Not too bad. And then you've got the all-time highs here. We'll put that in red at 64.29. But really, just looking at the weekly chart and keying in on like where it is, be careful, right? This is me going that far back is actually pretty probable. You can see that you're in the danger zone. You're already at 3 ATR on the weekly. It might be in a position to pull back. Not something that I'm necessarily looking to get into. I'd rather take the trend or the trend change, right? You get that trend change back here. That's more my speed. I prioritize the trends rather than a reversion to the mean. You do kind of see an indication of earnings, right? Things are really being, you're seeing a theme here. Pivots are really starting to happen around earnings or right after earnings. That's when you can find things on sale at a really good deal, but it starts to pivot. So we're gonna go take a peek at Cisco from a fundamental standpoint and see what we get. Boom. Right. So the long and short of it is nice dividends. Cash to debt isn't actually all that bad, right? They have increased debt a little bit, but that could be part of expansion. Debt increases the expenses a little bit. But revenues, right? When you see the revenue over a long period of time, if the debt increases revenue, that's good. That means whatever your asset that you're buying probably on debt is good, right? So free cash flow, because you had an increase in expenses, obviously we expect that to slump from the last couple of quarters if you're taking on new debt. right? Last couple of quarters, right? Taking on a lot of debt. Your free cash flow is gonna kind of show that, right? So there's Cisco. Next we have Coke. So Coca-Cola absolutely getting hammered, falling off a cliff here. Um, but that's good. Why? Why is this good? Let's go back to the fundamental charts and go look at Coca-Cola first. Let's start there, right? Let's go take a look at Coca-Cola, right? Uh, Boom, right? Dividend king, dude. Absolutely massive dividend. Free cash flow though, that's probably why it's fallen off a cliff. Second quarter of 2024, didn't look so hot. Went negative. So that's a big deal, huge deal for free cash flow for a company that's been pretty much positive this whole time. So if they can, I would watch this as almost a trigger. If they can get back to good revenue, right? Good revenue stream. Um, and you're looking to be a long time buyer of Coca-Cola, I don't think Coca-Cola is going anywhere, guys. That's the whole point. If you see this massive drop from 73.53 down to 61.74, what you're really telling me is okay, you gotta fix, you gotta get your act together. You gotta get your act together with the revenue, and I think people will be interested in the company again. And probably if you look at the revenue and how it tracks versus price, it probably is in sync, right? So it's just one of those things to consider. Um, it's one of those things to consider. Well, if it's tracking price to revenue, that's good. That means people are at least watching the fundamentals of the company, and they're like, hey, I want to buy this based off the fundamentals, not just because I like the drink. When you buy a company, you're buying systems. You're not just buying the product. So you got to keep that in mind. Systems and people. All right. So Pfizer, another one, absolutely just getting slammered here. But let's go look at the long-term underpinning of Pfizer. This is what I'm talking about. This is what I'm talking about right here. If you are looking to be a long-term buyer of something, right, like Pfizer, name brand, absolutely in the toilet there. Not taking any prisoners to the downside. If you're in the way, you're going down, right? But we see this step in, right? So let's say, for example, there's a major break of this hot zone right here, being at all time lows. This is where I'm looking to say, oh, so you want to play today, right? What do I mean by that? Is let's say this position gets broken. Well, if it gets broken, then we would want to be a buyer at 25.72. Why? Because I mean you're at the almost all time lows of lows, and if it gets back into at least this range being I'll mark it for you guys. Right here on the weekly chart and right here on the weekly chart. If it gets back in this range, this risk to reward is pretty massive. Massive. So this is just basically a rotational fundamental play where you see it here and it looks really juicy for Pfizer. And anyone who doesn't know, maybe allergy season will come around and kick this thing into high gear, but it could be in like serious hot water, right? You're basically paying for the name and hoping that they get their act together. So Coke, let me actually type in the right ticker in here. Still missed it. I promise I'll get it right, guys, Lord willing. Boom. All right, there it is, right? So free cash flow is up. Revenue is slightly doing better. The market hasn't reacted just yet. Let's see if the company, when I see the dividends, it kind of tells me, does the company feel like they're strong enough to pay you extra, right? It's been flat over the last year, but and it has increased from last year. It increased every year since after that. So up until obviously right here, 2010, right? So why is that important? Well, if you see the dividend drop, it's going to show that, hey, something might actually be in trouble and they're trying to take cash to save the company, right? Free cash flow to debt. Debt hasn't kind of been steady, in free cash has slightly increased. You got a previous 7.1 billion in cash and got 1.8 billion in cash, but the debt still is insane, right? 57.5 billion, 58 billion. So there you go. Debt's increasing, but cash is also increasing. So that's good. Free cash flow, let's take a look at that. It's very important. Just came off that slump there of negative $2.63 billion of negative free cash flow. But now you've got 5.7 billion in this quarter, right? Adjusted free cash flow. Let's go back to the standard free cash flow. Kind of a similar picture. So the reality is they're going positive, so that could be good if you see price actually reflect that change in the market. This could be something you could throw into your something that you could throw into your portfolio for the long term and be watching out for it, right? And with this, we'll go back over here to the charts here for you guys. With the amazing low that you have, because we put a trigger in here, so we want to be a buyer. And if how will we play this? If it breaks below the low 24.48, can you let it go, right? We're not necessarily looking to hold it into oblivion, right? But we are looking to make some returns, and we'll give it enough wiggle room to make it do what it wants to do, and then if it can't, we'll let it go, right? Now we have XCOM. Moving on, we have XCOM here. It is a up. It's currently in an uptrend. Not a very strong uptrend, but kind of a rotational uptrend. I'd say I'd be looking to be a buyer if it gets into this rotational zone here. Get rid of this blue candle or blue line, right? So if it breaks into this rotational zone, I'd be looking to take a buy, right up there, right? Oil, and kind of hold it into the next pivot high, right? Next pivot high. There is some danger, so you might want to take a heads up there, but we'll put the pivot high here. We'll mark that for ourselves. Boom. Want to be precise here. And then we're going to go ahead and mark that puppy red just so you know. Danger zone. Watch out. Sellers are probably going to step in, right? Just get ahead of it and see it on your chart. GIS, kind of same thing here at all-time lows. General Mills. So a lot of these long-term name brands are really feeling it, partly because of the price of everyday goods, and people just literally, you're seeing in the market, you're hearing people say, yeah, the price of everyday goods is hurting, and so that reflects in the price because the news gets people the momentum moving, and then the fundamentals combined with price trigger kind of carries the day. As you saw with Palantir, they were profitable way before the price started to reflect that. And so free cash flow kind of steady. It's been in decline over the last year, and that's probably why over the last year you haven't really seen a lot out of General Mills. I guess people aren't buying cereal. So shout out to you if you're avoiding those honeycombs and frosted flakes. Good for you, right? So going back over to price, look, what's the play? Essentially the play, it's red, so we're not really looking to be a buyer, but it is at lows. So if you do a biased buy, right, it still would be, I would need to see some, price action from the low to kind of confirm what I was thinking. We were actually looking to take that play if it didn't pivot in its if it didn't actually change trend to the downside, but it has since changed trend on the weekly chart. You can see here it definitely changed trend here. So we want to be more of a long-term buyer and holder of these things, and if we can catch a early rotational move, awesome. Moving on, Progressive, crushing it, absolutely crushing it, right? Insurance companies are absolutely crushing it. Definitely a trigger here for sure on this date. Well past earnings, definitely just a clear, juicy, amazing trigger off the dip to take that. So like, let's say for example, you get a couple indications like, hey, this thing might move. This is where you're buying that, right? You're buying that in this like very sweet zone. I call this the sweet zone. Um, Kind of taking the buy in the sweet zone, juicy rally all the way up to 263.85. You'd still be making a decision at pivot highs, but if it pushes a little bit higher, awesome. You know you might have a plan. Once you kind of take profits or make a decision, you can kind of sleep good at night. Why? Because you're not the sucker at the table. And that's kind of what I want you to key in on. You caught the move. It doesn't have to be everything. Doesn't have to be a slam run. Just get on base. Get on first. Get on second. Sometimes you're gonna get a triple, but a lot of times, base hits win games. So these base hits, just going from catching the low and absolutely catching this fat rip is amazing, especially if it comes right in your sweet spot, right in your strike zone. Okay, we didn't take that, but we were already in some amazing plays. One of the plays that we did take was this one, and that's why it's kind of the same thing. Pop in the strike zone, pop back out, took the swing, pop, got a juicy home run there, and still in it, and it's still moving. So we are taking those plays. We just don't have to take every one. Merrick. Merrick looking nasty. Been in a very clear defined uptrend, and the triggers kind of work the same way. So, or downtrend, clear defined downtrend. The triggers are kind of working the same way. There was a very clear trigger to take the short here, kind of on earnings, right? But you also get another day to take that here, right after this. So there's a rally, slight rally. It kind of takes a dip. You respect your sellers there, and then it follows through here with a nice juicy blowout candle. You probably be taking profits. It is at 3 ATR, and you're starting to see a pattern, right? Um, catch them on the rip, take the short, boom, and then ride the wave down with a nice stop above the high there, right? It's not going to always be perfect, but you're not going to also catch every move either. I'm going to shift this over a little bit, but the trigger really doesn't change. So something to watch out for. You got Merrick right there, to the downside, kind of at 3 ATR. So catching it on the rip to the downside is what you want to do. You don't want to catch it now at 3 ATR, right? You get more comfort. You almost get more buy biased. Doesn't mean it's going to go up. It's just something I'm watching for, right? XLK. So this is one that we did take. XLV, excuse me. It kind of did exactly what we kind of saw in Merrick. Very, very clear, juicy rip going out into a downtrend, right? Took the play on XLV, went down, made a decision as it broke the low. Awesome. Doesn't have to be perfect. We're not swan divers out here. And then you get a nice blowout candle through here. So that's what I'm talking about right here. So like, let's say for example, we move this to there and say, hey, if you trade above that, we'll let it go. We don't want it to move against us. But we've already taken our money off the table, right? I can sleep good at night knowing that, hey, the money I invested, I got all that back, and probably then some, and I'm in the play for free. So if you continue, more power to you. But this is what I'm talking about right here. It's just very simple. Doesn't have to be all like convoluted. It's respecting this level too. So that's a danger area. So, but if it breaks it, you're off to the races. And then you're still in a downtrend. So not cutting your profits just because it gets in the danger area. You have options. You have other plays. The XLV is actually ETF, so we're not going to go look at it. But we did kind of miss out on Merrick, so we'll go back and then we'll go on, right? Merrick. Right, let's go MRK. Boom. Good old Merrick. So good old Merrick, revenue strong. Look at that strong revenue right there. Well, bam, right? Free cash flow looking good. But when you consider that where it is, right? it's kind of choppy for revenue. Not something I want to put in my portfolio, but I would like to catch the short term volatility, and then when the market realizes, oh, these guys are profitable, long term dividends, buyers probably start stepping back in. Let's say you have a negative or a buy bias coming off a 3 ATR, could be a play. That is a setup. It's not my favorite. It's not my most favorite setup, but it is a setup, and your opportunity for it to increase goes up the deeper into the 3 ATR goes. But things that go down can continue to go down. It can go down all the way to zero. It doesn't have to stop just because there's an invisible line on your chart. Okay, and that's what I want you to really key in on. Most of these indicators, the moving averages, these are invisible lines on your chart. So making decisions on that, and this is exactly what I'm talking about. Just because it's at 3 ATR, ORCL blows past that and just follows a basic trigger of people getting offsides, right? Here's your clear trigger here, and I even put a because I wanted to see, I didn't want to buy it, but I was like, I wonder, it's close to 3 ATR. I wonder. You see the alert there? I didn't just put it there. I was tracking. Like, I wonder if it's gonna actually break below that, or will it do? Will it break the squiggle? Right, and it did. It clearly broke the squiggle to the upside. Absolutely massive. Right. Earnings was out of the way, so this was a what I like to call it a pure trigger. It wasn't based off earnings. It was just people were like, hey, it's going this way, and other people were like, no, it's not, Joker. It's going this way. So would you be okay? So just to kind of put this in perspective, would you be okay with price moving from 171.16 all the way up, blowout candle at 190? Would you be okay with that? Would you be okay with that? Most people would say yes. Okay. I don't know if you're crazy, but most people would say yes. Even if you make a decision at 178, you still caught an $8 move. Shout out to you. Good on you. Right. It's been a very strong uptrend. So let's go take a look at some of the fundamentals. I want to be thorough here because I want you guys to kind of key in on what we're doing. Right. Free cash flow is iffy. You're starting to kind of notice a trend here. Free cash flow is some quarters it just gets hammered, so it might be good and bad sometimes based off the season, and you gotta just kind of take that with a grain of salt. It seems like every three quarters is pretty good in the first quarter, or the last quarter is bad. 3 quarters is good, and then 1 quarter is bad. So it seems like it's part of the plan, right? So every 3 quarters you can see a method to their madness. But let's see if the dividends reflect that. Constantly increasing. We'll go 10 years. Yep, that is 10 years. Constantly increasing. So shout out to their dividend increasing, and that's something to watch out for. The price is 183.74. Not necessarily looking to leverage too much to kind of throw that in my portfolio for the dividend, right? But it is something to catch price movement on. Moving on, NVO. We're going to kind of roll through these. Don't want to make this too long of a video, but this is a Sunday video, so we did want to kind of key in on these. NVO, clear downtrend. You're kind of getting a picture here. We'll see if we can find some really juicy ones for you. But again, 3 ATR. So if you get buy biased, it wouldn't be, I wouldn't say it's right here. It is at 3 ATR though. So shout out to it. But long-term downtrend, you really didn't get a trigger to take the sell, but it did. There was a rally, right? To most important, there was a rally. So if you want a buy biased on this one, I would say wait till it gets above 108.75. That might be a little too high, but 108 where it kind of gets into the safe zone without a clear trigger. Really, it's without a clear trigger. Lockheed Martin made nice juicy profits from LMT, but we believe after we made a decision based off of this pivot. It has since slumped considerably. So this could be a real trend change in Lockheed, but if you notice, there was a dip buy. We took it, made a decision, took some profits from that decision. So even though everything doesn't have to be a home run, you can get a base hit and it makes your day, man. Lockheed Martin paid us pretty good, right? It went from this base hit went from 551 to 575. So if you're okay with just getting that juicy base hit, hey, you're in the right spot. Caught that move. Very nice. Abreva. Abreva kind of the same thing. It's not looking too good. There could be some real fundamentals that are affecting it. Maybe some news. But the biggest thing I see is earnings. Right, you can see that on the chart. What I watch out for, when I watch out for this guy for a buy, if he can maneuver, it's kind of getting into. If you notice, it's kind of getting into this. I'm gonna mark the trend here for you guys. It might be set this as a channel low for the trend. Right, so it's not exactly perfect, but it ain't wrong either. Remember, this is just an invisible squiggly line. So yeah, if we could see some potential price action and respect its lower side trend, could be a confirmation by bias, but not necessarily. If there's other things out there, I'd be looking to take that, right? Because this could easily turn into a downtrend. Don't want to get caught in that madness. And there is something to look out for. XLK, right? The Qs and the XLK did slip. This is something more my speed right here, if you're noticing. Definitely a red candle here, but this is also something that you want to be on track with, right? This is in the strike zone, and even through right here, it never really went red, but it got close. But there was a couple really clear buy triggers. So with the XLK, the info and tech sector kind of leading the charge, right? I want to come back to this chart. I want to kind of keen on this. Info and tech has been really leading the charge for a number of quarters. The info and tech is a red kind of at the top. So here recently, financials kind of challenged it for supremacy and it's popped out on top, right? We'll highlight those, get this all this other squiggle off there. But the reality is do I believe this is a good buying opportunity? I do. I do believe it's a good buying opportunity. But I would be more interested to see what's going on with financials and look for the buying opportunities there, since it has really taken off there. The Qs were a little extended. Everyone's been saying that. So financials with the interest rate cuts might be doing a lot better. Okay. Kicking back over to CRM. We're kind of going through these a little faster. If you notice here, definitely buys here. Not the trigger I like to see, but you did get some early indications. This could go into a rally, right? We kick this back. I like to right where it starts the green break right there on that candle. So yeah, there was some indications, but no trigger that I necessarily liked, but it did rally. So Salesforce, shout out to Salesforce. I think it made some cuts, like layoffs in Salesforce. You can go look at Salesforce because I think it's a pretty good company, CRM. Right. Yeah, revenue growth is really nice. That's what you like to see right here. Free cash flow has been pretty positive, but look at this revenue growth. Just disgusting. So shout out to them. Revenue growth is like pretty much parabolic. Cash to debt is actually pretty good. So Salesforce, really good company to watch out for, to kind of take that dip buy or trend change buy, right? If you get a confirmation bias on the trend, cool, take it. But the fundamentals can say, well, I want to be part of a company with strong fundamentals. And you can see what it does when the trend actually changes, right? Well, trend change here, get paid. Trend change here, get paid. Trend change positive here, gets paid, right? The only one that didn't is long-term downtrend. Trend change didn't get paid. Stop out at the low, right? Keep it tight. Trend change here, got paid massively. Same thing here. So most of the time when it goes green, it runs. That's what I really want you to say. You can start putting plans together based off of just very broad general paint strokes. It doesn't have to be this big to-do-da, man. I'm telling you, people will be confusing people, and for what? So, like, how would I go about doing this if I was going to make a plan? Let's say we put this in green here. It'd be simple. The indication, the first indication is going to trend here. Okay, if you break the high here, awesome. I'll take the buy. You do stop out at the low of that week. Call it a day. Very simple. Keep it tight and let your winners run. Really let them run. But you gotta be patient. You gotta wait for clear, defined rules. Okay. PepsiCo in hot water recently in hot water. So as you see PepsiCo here, right? Boom. It's kind of the same thing with CRM. No real clear indication, right? Not the trigger that I like to see, but there is a trend change, right? And the last time it had a trend change, absolutely tanked. We did actually, I think, took a hit or got stopped out like right here on that trend change. So getting out of the way of something is good, right? You want to get out of the way when it's not behaving, right? You don't want to be in the way of that. But yeah, we would be looking for a slight rally to take the sell into, because if you kind of compress it there, it's already in the danger zone, right? Let's put this right here. Boom. So respecting that level is pertinent because if it goes rotational, right? Not saying that it would, but if it goes rotational, right, I'd be looking to be a buyer, buying the dips, right? Looking like it wants to be rotational, not looking to play that game, at least to the upside. Look more to play it to the downside. Okay. OMC, Omicron Group. Um, Something to watch out for when you see a massive indication here, um, and earnings increase. It's just something to really be wary of, right? So just if I'm taking a snapshot of this chart right here, I'm like, okay, you're definitely struggling in something. Something happened, and the fundamentals are okay, but you have sense. So if you're gonna be in by bias, right, at minimum, right, at minimum, it needs to be in above $99, right? I wouldn't even consider 90 if it's not above 99.50. Don't even look at it. Why? Because you don't have any trigger to go back up. So you're in this trading range, right? You're in this range at the worst, right? I would say at the worst, but things that are bad can get worse, right? Kind of respects. We can draw this all the way out here, type thing. Thank you. Cool. So at worst, boom, 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 right? Pinballing, and then if it comes back down here, it's a rough day. So don't be like, oh well, if it, wait for the trigger, just have a plan. Like, okay, if it comes back above here, I'll take the buy, stop out at the low. Okay, easy day. It's not. That's not how I would do it. But buy low, sell high. That's the only thing I can really say about that. ANC. ANC definitely looking good. Definitely took this play. This play was on a more advanced strategy, so I'm not going to get too much into the details. We did see it. It did pop. I didn't think it was going to run, so I put on one of the more advanced strategies that I like to put on. Played out like 120%. Everyone's happy, right? Worked out really, really well. But I am looking to consider stepping back in if we see another trigger happen here. Remember, this isn't a very defined, very clear uptrend. Now trends do change, and we want to not be on the wrong side of that trend. But as it stands right now, I wasn't too happy about the way this thing pulled back, so I took a little bit more advanced play, watched like a hawk, took profits, like I'm done, and rightfully so, right? Pull back down, easy day. Amazon. We will go look at the fundamentals of Amazon here in about two shakes. In a very clear uptrend with a nice pop. You did see that there was an indication of buy. This is an earnings, so some people avoid that. I wouldn't blame you if you did. It did cinch rally. Didn't really miss that because I'm like, okay, you missed it, but who cares because it's based off earnings. So not really like I like to get it more down here in the strike zone, but you do want to know when things are pushing. So let's go look at fundamentals of Amazon because Amazon is a big part of people's every day, especially on those prime days, baby. AMZN, boom. Here we go. You've got price, got revenue, and it's looking pretty strong, right? I don't think Amazon's going anywhere. Free cash flow though, I think Jeff has got some explaining to do. Talking about he's negative on the free cash flow. Ain't no way. They have laid off a lot of people, and when you look at cash to debt, this tells kind of a different story. Laid off a lot of people, and the debt has increased considerably. So that might be why they did the layoffs. Is like, hey, we gotta find somewhere. We gotta make up this payment, and so they just started laying off folks. Let's see if expenses have increased. Cash to debt expenses. Actually, no. Expenses have decreased. So since last quarter, expenses have decreased. This is quarter three. Quarter four numbers haven't necessarily come out yet, but if you notice, at, there's a trend that the overall since the last pivot that the expenses have decreased, and that's good, right? That we want to see a strong company decrease their expenditures so that everyone can benefit from a very efficient Amazon. DHR. We're gonna switch here. Same thing here. You're seeing a lot of choppiness, right? And there was a slight rip, not necessarily a trigger we like. A little late on the trigger, but the reality is if it's not the one we want, we don't gotta swing. It's very simple. Not gonna get too much into this. Um, Earnings wasn't probably as good as people wanted, and they kind of just let it go, let them know, and let it go. AMGN. Oof, brutal, absolutely brutal. Um, Now this would be one where I'd be like, what's a short interest on this, right? Because let's say, for example, I mean, you get a buy biased, and you're looking at a 3 ATR buy, right? Looking at like just a short term pivot move. I could see it, but I mean, with all this pressure, if you're not in, stay away. If you are into the upside, you better pray. AMAT. Did make some profits on it to the downside, rolled that. Got in a little late though. We just noticed that there was like so much there. But this was a while ago. Here recently though, nothing's really changed. Really still kind of sliding, so there's really not much to say about here. Look to short the rips. Here's a prime example of catching a move to the downside. It doesn't have to be a home run; it just has to be a base hit. Now this one, this could be a nice juicy base hit, but the problem is here that the 21 is starting to kind of curl a little bit. I don't like to see that, but it is still kind of in the strike zone here. Um, we'll put an alert there because if it does trigger, it'll be a natural trigger. It won't be a Hardy's trigger, and so maybe it's just had a really rough go at it, and let's go. Actually, let's go look at the fundamentals. I just want to see for Vertex. What's the deal, man? What are we doing? VRTX, Mr. Vertex, pharmaceuticals, getting hammered, right? So that's probably why. Um, let's see. Last, I mean, it's coming off of a $3 billion loss in revenue, um, and for it to make that up to go 1.4 billion in free cash flow. Oh no, guys! I mean, that's a swing of swings. Might be some funny business in the books there. Cash, maybe they deploy a lot of cash to pay down some debt, or they use cash to get into some debt. And maybe made a large acquisition. That's something we could do research on, but not looking to do that with the time that we have. Is the revenue increasing? Yep, it is. Okay, so strong revenue growth. So is it a buy? I'd say, at this price, if you get a nice trigger, yeah, you could take it. Risk is where the reward is. But I would say, just be careful. Make sure you have a very clear plan on where you want to get out of things and what happens, and protect yourself in that case. Kind of same story here. Started going negative. We're gonna mark that for you guys. This is TMO, right? TMO. watch out to it. Uh, at the start, clear trigger, right? But same thing, earnings trigger. So you could take an earnings trigger. I won't tell you to not take an earnings trigger, but I won't. I have a. You can get burned just as much as you can get rewarded. So hop you over to TMO so you can actually see it. Clearly downtrend, clearly trigger to take to the downside. Blowout candle right here, massive returns. You would be looking at 556 to essentially 511. So not a bad $40 move. You'd be catching a windfall there if you caught that play. REGN, brutal, man, absolutely brutal. Really no triggers to catch it slipping at all. I mean, it's been pretty much murder she wrote. So with this play being so negative, like how would you play it? Well, at some point, you would get look by bias. He's down 3%, $25. Something might have happened. Let's go look because there could be an opportunity here. Let's go take a peek here. Switch my chart over. REGN. Boom. Let me look at this. This is cute. Got a lot of cash to that. So you're not in hot water. Your free cash flow is not in hot water. Not since 2020. Third quarter. So what gives, man? This might be one you put on your list, right? Massive price decline. Nice revenue, right? Increasing revenue, actually. These two, the Mountain of Sauron spikes there for sure. But the reality is yeah, we're looking good, and with this massive drop, with increasing, like I just don't get it, right? So with stuff like that, I kind of want to be. We'll put alerts here, right? Put a double trigger there. Maybe it has a gap fill, and that's kind of where the danger area would be, is on the gap fill, if we can get the gap fill, right? And it's right there in the danger zone anyway, so that's something that we're looking at. Gap fill in the danger zone, right there. See where the gap starts and it just keeps running. Where did it stop? Oh, it found resistance at the top, right? So the fundamentals are definitely in play, even though it's breaking records to the downside. Maybe just it got downsized or something. That's something that also this app does over here, is it gives you articles on what could be happening, right? So when you go and you see the stock and you see, okay, the fundamentals are essentially saying this here, right? As it falls, these fundamentals are over to the left, right? They're being generated by levels to the left, where it's stopping, kind of falling. You see this pivot low here. You see this these pivot highs where it kind of halted. So yeah, this is if it takes a buy, you could at least see a rotation up into the zone. That's where, but you obviously would want to stop out at the low, because where does it go after this? If it's keeping to its fundamentals, probably right here. Let's tested it a few times. Doesn't mean it has to. Remember, this is an invisible line in space, so it doesn't have to respect your invisible line. So just keep that in mind. Adobe, but watch that one. REGN, right? It's on our list. Adobe baby, like Obi-Wan Kenobi. So yeah, clearly a very juicy trigger to take the sell here. Sorry, so sorry. Right, natural trigger right here to take Adobe to the downside. Again, we're not looking to take the Adobe to the downside yet, but we did want to see if it got to the lows, hypothetically, right? The only reason we're trying to clear the books right now, so not looking to necessarily make that play. This is definitely a danger area here, so we're going to mark that in yellow. Be a yellow line. Okay, why are you so dangerous? You're scary. Scary line, you. Boom, boom. Right on the daily chart, a little danger area there. But we just wanted to see, if we can make a decision here. Would it work out? Probably will, but we won't know till it dings. Kind of same thing here, man. Really no follow through on this guy. I did have a confirmation, buy confirmation bias, 3 ATR. I was trying to catch the bounce, like okay, if you're gonna bounce, reversion to the mean. It did not. It just kept sliding, and we let it go. So that's why it's not my favorite trade to do reversion to the mean or confirmation bias buy. I rather do stuff like this, take it to the downside. But this is earnings, so what can you do? There's some natural triggers, but that wasn't one of them. And so we saw, it was decent, right? We felt like okay, if there's gonna be some fall through, awesome. But when you see something like this, probably it's better to just get out of the way. We just hoping we are gonna catch somebody slipping, and we didn't. We got caught slipping. Um, Lily, again, not the best. Not in the best position right here for Lily. Buyers definitely got washed here, and yeah, it's not looking too pretty. So I don't know why it keeps. Okay, probably I need to change that setting. Excuse me. Weekly time frame. Not 15 years. Let's go back. 5 years. Yeah, 5 years. That's fine. Cool. Agreeable. So yeah, it could trade down to the support level. Definitely could see that doing that. Just ran through this support level. So yeah, just something to watch out for Lily. So guys, that's all of the plays we have for you today. I absolutely love bringing you this content because at the end of the day, your financial future really does rest in your hand. You just got to really find an edge, find what works for you, and kind of stick to it. So if you like what you've been seeing and you want to check out some of this content about the market, or you want to check out our other content about the just finances in general, this is the page for you, right? It's definitely advice that we're giving from experience that we've garnered by actually doing the things, investing a lot of money into our development, investing a lot of money into learning, and we're seeing it pay off. Is kind of surreal. Like, wow, this is a long time coming. So definitely like looking at the charts and the system and checking out the fundamentals. It's really important so that we can know what's going on in the market. So, as you guys, this is your boy MC Fire. Loving it, and tap in with me next Sunday. We'll dive right in again. Have a good day and goodbye.